Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 256. The question is oil bottoming or is it going to drop below this current support? That seems to be the major sort of point of, the pivoting point, whether market goes up or down and how the oil prices will behave. So we'll look at the oil charts and try to make some sense out of them. But first, we'll look at the markets. As we mentioned in yesterday's episode, the market looks ripe for a rally, and that's what we got today. Metals, PSU banks, real estate stocks, private banks, commodities, public sector enterprise, auto stocks, IT, all were up from the very start of the day, and the entire day was spent, in the green territory, with hardly any stock, in the red. So very good day after many days, and this may start a sort of a new intermediate leg up, as we mentioned yesterday, towards 16,700, 16,900, if we don't get any overnight surprises. So this is a sort of a nice development after many days and weeks of getting badgered in the market, and this will give some solace to wounded portfolios. So as I mentioned, Nifty up 0.9%, small caps up 1.3%. So this was the difference from yesterday, where small caps were not participating, but today they participated well. Mid and small cap index also up 1.3%. So breadth is very good in the market. In terms of weekend investing strategies, also several strategies between 0.5% and 1.5%, and some with higher cash, less than 0.5%, but overall reasonably good in terms of the catch up. You can see here big names making large moves. So Titan up almost 6%, Tata Motors up 3.5%, JSW Steel up 3.5%, Tata Steel up 5%. So metals made a huge comeback after being oversold for so long. Hindalco, it was up 6%, L&T up 3.5%, Coal India, ONGC up 2% each. The only stock which I thought was, sulking in today's market was Reliance, which was down minus 1%. Other than that, the private banks, HDFC Bank, ICICI Bank, Kotak Bank, all doing quite well. IT was subdued, but still at least not in the red. So, and power stocks also up very nicely. So very good breadth on the overall day. Star Health up 12%, top gainer. Sobha up 10%. There's some very good cues are there on real estate stocks, with companies coming out with fantastic numbers for the last period gone by, and more and more analysis of the real estate inventories, at least in NCR region and other regions, with inventories coming at last many years low. So it does seem like the real estate sector has got its act together for now. CEAT up 10%, NBCC up 10%, Canara Bank up 8.5%. So very good runs on those. On the losing stocks, GMM Pfaudler down 4%, Godrej Consumer, GlaxoSmithKline, KNR Construct, and Vijaya Diagnostic up between 2 and 3%. So very few losers as such. Now the entire world is looking at oil, and this is sort of a mixed bag right now, where oil has come back from 130, it came back to this 95 levels, then it went to 117, came back to 95, then it went back again to 124, came back to 95. So this 95, 93 levels and about 97, 98 on Brent seem to be major support area. And while most people are expecting this to drop down, there is, I think, a good chance that it takes support here and goes back up again. So I think the oil story is not yet over. The oil bull is not yet over. And if you see the gains from the war started end of February here from 92 levels. So it is not that the Ukrainian war has caused oil to go beyond, let's say, 60, 70. We were already at 90 before Ukraine war started. So if we have to sort of go back a few months, and we were at this point before the war started, we were already at 1992. So inflation impact of oil was already on oil was already there, and we have now retraced back most of the uh, gains made due to the war. We are pretty much near this 92, 95 levels. So there could be a chance that we bottom out here, and oil starts to strengthen again. So a lot of commodities have come down, but I think these are corrections in a larger bull cycle of commodities. So I am not in the camp there where I am visualizing that all commodities have peaked and now for many years they're going down. I don't think so, but I can be totally wrong. So my sense is that the commodities have been crushed in terms of a very sudden demand pullback, and I think they can't go further, as the metal stocks have also shown today, that I think this part of the leg is coming to an end, and we may start going up. But of course, this is all conjecture at this point. Another sort of point to look at is the DXY. So the US dollar index is gaining every day. Yesterday it was at 107, and this is a chart from Charlie Balelo. You can see how dramatically it has gone up from 90 levels very recently to 106, and about 60% of DXY is made up of euro and yen. So it is primarily dollar versus euro and yen, and then all the other currencies put together. So euro is devaluing very fast versus the dollar, and so is yen. So I mean, these are like, yen is definitely a huge carry currency, and all these impacts will come and haunt us in terms of INR depreciation, or maybe even China will have to depreciate now, because how long can you see the Japanese and the euro getting devalued against the dollar and holding your currency? I mean, I think RBI is also taking steps to make sure that we have more inflows of forex coming in, because they are also seeing that they cannot keep defending any particular level for too long. So currency is a problem, especially US dollar going up dramatically is a problem, and we can see that in 1980 also it went from about 90 to almost 160, 170 in a flash over the next 3-4 years. We don't know where this leg is going. Maybe it will go to 120 and drop off. Maybe it will go just drop off from here. Maybe it will go all the way. If it and US dollar is like the anti to everything else. So US dollar goes up, all other assets come down, because money gets pulled out of all other assets and goes into US dollar. That's the safe haven sort of the world. So unless US dollar itself becomes lesser of a global reserve currency, this phenomena will not change. And for those who would like to read more about this, you should read up on how the dollar has played the role in 1980s and how they were able to tame this inflation in that period. So this is something to watch. Regardless of currency fundamentals that we have, and we have very good fundamentals, I think the US dollar becomes is the biggest sort of headwind that India has right now. Another factor that most people are watching are the US 10-year yields. So that also you can see that since August or maybe March 2020, since the COVID crash, when it went to near zero, it has now leapt to almost 3.5%. But in the last few weeks, it has come down to 2.8, 2.9%. So it seems that the market is sort of pricing in a peak in the yields for now. But we'll have to see whether this drops below this 2.65 levels or something. Once it does that, then I think it has really peaked for the medium term, and that will be very good for equity markets and emerging markets, so on and so forth. The one thing that I was remembering about the dollar index was something called the Triffin's paradox. So please go and read about Triffin's paradox, how being the dollar reserve currency, dollar being the reserve currency in the world, is sort of self-defeating for the US itself. to some extent. So please do a check out on Triffin's paradox, and you'll understand this phenomena really well. So my sense is that the market is sensing that maybe the interest rates cycles that are already discounted, that's the end of the rise, and we may see maybe some commentary in the July Fed meet, which may suggest that we only have one or two increases to go, or that we are stalling somewhere. And I think market is trying, or maybe starting to sense that, and that's why we are seeing this kickoff rally in the equities. So that's just my guess, but my guess is as good as yours. So this is all I had for weekend investing daily bites, and please do like and subscribe to the channel and share it with your loved ones. Thank you.